Hey everyone, welcome back to Corporate Decoder, the place where we translate complicated corporate reports into plain English. Today we are going to dive into Veeva Systems' latest 10Q filing, their quarterly report. Get ready for a roller coaster because this report has some interesting twists and turns, and not all of them are from excitement about stock prices. If you like decoding what Wall Street wants to hide, make sure to subscribe and come join the discussion on our Discord server, linked in the description. Here's the gist of what we're looking at. Veeva, a big player in cloud solutions for the life sciences industry, just released their report for the quarter ending in April. They're showing revenue growth and profits, but let's see if the numbers paint the whole picture or if there is something else. Let's cut straight to the numbers. If we scroll down to the balance sheets, these are a snapshot of the company's assets and liabilities. We'll start there. One thing that jumps out is accounts receivable net. It went from about 1 billion to around 492 million. It means people have paid them what they owe, but it could also mean they had a hard time collecting debts. However, it's probably the first thing someone might look into. Next, check out their retained earnings. It went up, which is good. It means they're good at running the business. Okay, so those were snapshots. To get an idea of the recent performance, let's look at the statements of comprehensive income. The total revenues shows their top line, how much money they are making. This quarter they made $759 million, which is an increase from the $650 million they made last year. That is not bad at all. Next is probably the most important number, which is net income. This quarter they cleared over $228 million, up from around $161 million, about a 41% jump. You know what they say, revenue is vanity, profit is sanity. However, more important than the raw amount of money is the net income per share. This is what most investors will really focus on. Diluted earnings, which account for potential stock dilutions, went from 98 cents to 1.37. So you can see why analysts are pretty happy with those numbers. Now, to see if this income is actually real and not just paper gains, we have to look at the cash flow statements. This shows actual movement of cash in and out of the business. We start with their net income, again, which makes sense. If we keep scrolling, we can see if the net income is actually reflecting the amount of cash the company is getting. Okay, it looks great. The net cash provided by operating activities is roughly $877 million versus $763 million. This means they are converting more income into cash. Lastly, let's take a peek at how much cash they have in the bank. Their cash equivalents, and restricted cash at end of period is almost $2 billion compared to about $1.2 billion. They are swimming in dough. Now for a bit of analysis of some of the notes, which is the fine print of the report that may be material or that the company wants to bring attention to. Here's a peek at their investments in various short-term things. Looks like they are mostly in safe things like US Treasury bonds, foreign government bonds, etc. So pretty standard. Then we have information on accounting standards, changes which are required to be listed here. These new tax laws are coming into effect next year, and while they will affect Veeva, the company is still calculating it. Now, this is always a juicy section to read, which is about legal issues or other problems facing the company. Veeva is a defendant to some degree or another in a few cases, and one involves them versus IQV. It started a while ago, and it seems to revolve around alleged trade secret theft and disagreements about IQVI data use in Veeva products. Basically, they are fighting over who can use what data and who is playing fair. There is a lot of back and forth with each party wanting money from each other. Veeva thinks they can win. Long story short, it could cost them some money. Lastly, let's peek at the Rule 10b5-1 trading plans, and those are just plans by directors to sell off their stocks at a certain time in the future. It's standard for large companies. Of course, as always, we have to review the risk factors. These are things that might happen in the future. As always, a top concern for any cloud company or software company is cybersecurity, because one slip up could cause huge monetary and reputational loss for a company that relies on reputation. The cloud solutions market is competitive, with Veeva facing off against giants like Salesforce and Oracle. They need to keep innovating to stay ahead. Smaller players might also pop up and create pricing pressures. It also seems that Salesforce can now compete with Veeva more aggressively. Almost all of their income comes from the life sciences industry. So anything that hurts this industry can hurt Veeva. That could be regulatory changes, economic issues, or just companies merging and not needing as many subscriptions. As a public benefit corporation, or PBC, It has to act in the best interest of all people, not just shareholders. It also means their managers are open to more lawsuits since different shareholders can take them to court saying they did not uphold that cause. Now, looking at these results more broadly, Veeva seems to be in a great position. Their financial health is very strong with great management and financial decisions. They should be able to continue that path for a while. Their growth is also great. As always, one thing to be careful about is the legal case. If it goes south, it may cost the company much more. However, from an outside point of view, this is not something that is currently scaring investors. Alright, that's our breakdown of Veeva's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.